Good morning, good afternoon, good evening, wherever you happen to be in the world. Thank you very much for joining us, especially for this session, the first session of our annual Congress. It is a real pleasure to have you all here. We're very excited about this Congress. It has exceeded our expectations. We are delighted to have 22 governments presenting their pipelines of projects and talking about their PPP activities. We have 106 speakers lined up, and we have, I think, about 20 different sessions. It is, those of you who have missed my opening remarks, I will very briefly say that you can click on the icon that says people, and then you can get to see who else is here and connect with them, and invite them to have private conversations, if you like, in the area called Lounge, and sit at a table just like you would do in any other conference. This is, WAPP is all about networking, so we are happy to be able to offer that through this event. We are also all about making sure that our profession is seen in the right way, and that PPP is moved to the next level, not only regarding PPP as a tool for public procurement, but as a tool for development and a tool for implementing the sustainable development goals. This is very important because the world needs this, and I think we all have a shared responsibility to make sure that we execute PPP projects well, that we apply best practices so that we all can feel proud of our profession. And this is what we are trying to do. With me today is a fantastic panel. We have with us Professor Dr. Mahmoud MOHIELDIN. Mr. Mahmoud is Executive Director of the IMF, after having been a Senior Vice President of the World Bank Group, with a fantastic career and very well known worldwide. He's also been appointed by Secretary General Guterres as United Nations Special Envoy on financing the 2030 Sustainable Development Agenda. Mahmoud, it's fantastic to have you with us. I'm really delighted you could make it.
Thank you so much. Thanks for the kind introduction.
We also have with us Imad FAKHOURY, who served as a minister in successive Jordanian governments and was senior advisor to the IFC on private sector solutions until he joined the World Bank as Global Director of Infrastructure Finance, PPP and Guarantees. Really a very, very important role for all of us, because I think all our eyes go towards the World Bank anytime we are talking about PPP and development. Imad, fantastic to have you with us. Thank you for joining.
Pleasure to be with all of you, Ziad. Thank you.
And then we have with us Piers CUMBERLEGE, who has worked with multinational corporations, with private equity firms, with governments and NGOs worldwide. He is a director of the South Pole Group. He has managed investment funds in Russia and Africa, and he's a member of the advisory board of FinDev Canada. Piers brings a lifetime of experience in all aspects related to PPP. So Piers, wonderful to have you with us. Thank you for joining.
Yeah, thank you for the opportunity. Very honored to be with such distinguished other panelists.
Thank you. So I will ask the same question of the panelists, and each panelist will have 5 minutes to answer the question in their own way, and adding whatever flavor they wish to add to it, given the subject of this session, which is PPP and ESG. And so I will start with Dr. Mahmoud. And I would say this question is, infrastructure financing gap has been growing ever wider, and the need for sustainable development has become more and more critical. There are substantial pools of funds available for sustainable projects, and we know that ESG pools have been growing very, very rapidly. Are governments doing enough to attract ESG funding, and what can they do about it to make sure they get more ESG funding?
Right. Thank you so much for the introduction and for this very timely question. I'm saying it's timely because everybody, especially after the G7 summit, is talking about recovery and building back better. There are partnerships for building back better, and the emphasis on infrastructure cannot really be denied in that. What you can see really that there is a great need for infrastructure development, especially if you take a broader definition of infrastructure to include broadband, digital transformation. The talk about this kind of building back better, the better means greener and smarter. This tells us that governments alone cannot really do it, and we have been seeing a widening gap of SDG financing almost by 70% based on recent updates from OECD DAC, that we have now globally a gap of finance of around $4.2 trillion by the end of 2020. So now you have the need, but the issues related to finance need really to be resolved. With the fiscal space shrinking, with debts around the world have been accumulating. Latest figures from the Institute of International Finance is telling us that we reached almost 290 trillion, or more than 360% of GDP. So the PPP solution here comes really as the wise, smart way of getting things done, but it is not, as you highlighted in your book. It needs really requirements. It will not really come on its own. It needs prerequisites, capacity building for governments, issues related to governance and long-term contractual arrangements need really to be resolved. Matters related to transparency need to be addressed. And the internal coordination between normally ministries of finance, central banks, and line ministries need to be carefully aligned. What I've been seeing of giving me hope, and it's great to see my colleagues in the panel, Imad and Piers, with their expertise in this area, we can see examples that could really take us in small-scale projects like access to grids, and in Ghana of around $210,000. Some recent World Bank projects are telling us that this could really be tailored for small scale needs, or for the huge capacity for energy and production of energy, like the projects in Ouarzazate in Morocco, or in Benban in south of Egypt, with huge partnerships between private sector, government, and the multilateral development banks. So there are precedents here of good projects. What we need really is to address the requirements, including the pipeline of projects. And there is one area, perhaps I may come to address it later, because you mentioned ESG, and you are very much right. You have seen a colorful issuance of variety of bonds during the last 18 months. Green bonds, blue bonds, SDG equity-linked bonds, and social development bonds. But despite the increase, we are not really meeting that very big gap. Latest figure I saw was around $150 billion of accumulated issuance. So if I see the gap of funding based on the recent estimate by the IMF in areas related to essential infrastructure, water, energy, and support to the infrastructure for development, the requirements are much more than that. So we need more than the limited transactions. And the area of tension here, because I see that as an area of transformation, the talk today about climate change and the
30
investment
seconds.
in adaptation and mitigation tells us that net zeros could really be achieved with some good collaboration between government and the private sector. But at the same time, I see another track almost neglected these days, which is the track of the Sustainable Development Goals, which is suffering from that huge gap that I mentioned earlier of $4 trillion plus. And then I see a third track, which is basically about the ESG. So I think the three tracks need really to be having some elements of coordination and some alignments. Otherwise, we're going to be seeing multi-tier systems unnecessarily, and we're not going to be meeting targets. Happy to come back later. Thank you.
Thank you very much. Very important point. And we have the Equator Principles and the QII and many other efforts, and People First PPP and all of these things. So we need to find ways to bring them together. Dr. Imad, again, a huge infrastructure financing gap, a lot of pools in ESG. Are governments doing enough to attract such funding for sustainable projects?
Thank you, Ziad, and very much to build on Mahmoud. But let's also take the right context in view of also what COVID has added to the challenge. So this pandemic has now easily pushed an additional 100 million people into extreme poverty. And we have governments still dealing with different waves of COVID. And 2020 has been, an unprecedented year in terms of global contraction. And fiscal space has disappeared, and much higher burdens have been experienced by the majority of governments, and especially those who have been dependent on commodity exports and tourism, who have even less flexibility. And very much we're seeing for those who have stabilized are trying to rush to build back fast. And I think our challenge is going to be how to make sure that they build back better for a green, resilient, and inclusive recovery. And as you said, Ziad, the concessional resources are going to be, we've known that, insufficient to meet the infrastructure investments for SDGs. Our World Bank analytical work is showing that with the right policies, smart infrastructural investments in the range or an average of 4.5 percentage points of GDP will enable low and middle income countries to achieve the infrastructure related SDGs and also stay hopefully on track on the climate target of below 2 degrees centigrade. And I want to also emphasize the centrality of also maintenance and maintaining infrastructure investments, because if that's not done along the life cycle, then the life cycle cost can increase on countries and nations by an average of 50%. Now, the reality out there is that private participation in infrastructure, and we've been tracking this at the bank for the past 30 years, has averaged maybe 9 to 13% of infrastructure investments in emerging markets and developing economies. And what we've seen last year, specifically on the PPI database, we have seen an unprecedented drop of 52%, which has been quite significant in terms of the size of disruption that we're seeing. So the reality is we definitely need more investment in sustainable and quality infrastructure going forward. And we need the necessary resilient frameworks and enabling environments that Mahmoud had referred to. From the World Bank Group context, we're helping countries maximize their development resources by drawing on private financing and sustainable private sector solutions that offers value for money, that meet the highest environmental, social, and fiscal responsibility standards, and reserve really the scarce public funding for areas where private sector engagement is not going to be optimal or is not available. And this is very much the maximizing financing development approach of the World Bank post the Addis Ababa agenda. So in terms of our role to scale up private participation, we're trying to help governments deploy private sector solutions that are informed by best practice, good governance, transparency, and fiscal sustainability. We need to factor in technology and digitization, which can help leapfrog. And we want to also achieve universal, equitable, affordable, and low carbon access to infrastructure. And we want to make sure in our support that governments take key areas of sustainability, such as social benefits and inclusion, including gender, employment generation, climate and environment, and impact on economic growth. And the economic recovery is going also to be a fertile period for governments that we're trying to help, hopefully in partnership, that they pursue the necessary infrastructure and the cross-cutting policy reforms that will be needed and critical for them to help them scale up private sector participation and solutions, especially through PPPs and the crowding of commercial financing. So in partnership with our global platforms as a World Bank Group, with IFC and MIGA, we are deepening our support to governments so that we can create the conducive private participation ecosystem where we bring in carefully the PPP frameworks with the public investment management framework, with the fiscal commitment and contingent liability frameworks. They have to come together as an ecosystem in order to enable governments to systematically pursue, maximizing the use of PPPs in a sustainable manner. We want to also create the necessary robust regulatory regimes for the different sectors, build a sound pipeline of well-selected and well-prioritized and structured projects that are bankable and that are fiscally affordable. Finally, I would maybe argue for 5 or 6 quick, critical points to help governments and all of us as a global partnership to scale up commercial and institutional financing. The first is to expand.
Could I ask you to save this for the
absolutely
a little bit later on?
Absolutely, Ziad.
Thank you, Piers. Again, a great need for infrastructure financing, a lot of ESG funding, governments, many places still relying on multilateral development banks, especially in the emerging markets, instead of accessing international capital markets and looking for ESG funding, structuring projects that can be rated investment grade or tranching them into various tranches for their financing. So what are they doing well? What can they do?
Well, Ziad, firstly, it's difficult to follow 2 such excellent and thorough presentations by Mahmoud and Imad. And certainly to try and follow them along the line of infrastructure would be futile for our audience. Let me approach it from a slightly different dimension, which is to think of it in terms of the capital suppliers, rather than the government demand, but from the capital supply perspective. We talk about, indeed, a large wall of capital that is looking for ESG investment opportunities and is not finding those opportunities. There doesn't seem to be access to a pipeline that is unlocking the capital. Now, I'd like to suggest there are perhaps a couple of reasons for that. ESG alone is one of the reasons. It's a very complicated label. It seems simple, there's 3 letters, but in fact, underlying the ESG, there are so many different frameworks with an alphabet soup of standards and norms that the willing investor doesn't really know where to go and doesn't really know how to deploy their capital and be fairly certain that there's going to be a monitoring system and some kind of regulatory environment which they understand and which is coherent. That said, within Europe, since the beginning of this year, the EU has actually made a big step forward, and I think that is going to unlock also retail capital as well as institutional capital into the space. There are a lot of people in the street, and there are a lot of philanthropists, and there are a lot of significant sources of private capital that want to find their way into the infrastructure and other SDG investments in particularly emerging markets, but not exclusively. To a certain extent, the term PPP is a bit daunting for many of them. They think of it as something which is just too far away from their daily awareness to want to get involved in it. And I think so partly there's a question of democratizing the term and making it more accessible and making people understand that PPP is not necessarily only very substantial sort of infrastructure projects that the ordinary investor can't get involved in. But actually it can be applied to any type of relationship where capital and is coming in through that association of the private sector and the public sector. And I would also add, with the, I think, important roles that the civil society can play in that too. In order to make it happen, there needs to be some intermediation. And I think one of the challenges is that intermediation is speaking to the institutional investors. I think of the GISD, for example, for the SDG financing structures. It's speaking obviously to the multilaterals. It's still not speaking, that intermediation, still not speaking to the ordinary investor in the street, who ultimately, their $1,000 isn't going to go to making of an infrastructure project, but several of them altogether are contributing into funds which actually become conduits. Makes a lot of sense. Another challenge, I think, is the fact that, and I think of the SDG financing fair that was held in April, which I attended, there was some excellent projects put forward by various countries, but they were a long way from investment ready. And they were put forward at a concept level. And frankly, I think the investors who are willing investors and interested investors are saying, okay, how much heavy lifting do I have to do to unlock the capital into these projects? Surely the person who's selling me the project has to try and sell me something which is investable. So I think there's a question there. As I said, that also is a role for the intermediaries who can broker that, who can package the projects, package the opportunity, and package it, frankly, in a language that both sides understand and are comfortable with. You talk about the neglected SDG gap. Both of you referred to that, and Mahmoud particularly talked of it. One of the things we are doing, and this is with the SDG lab in Geneva, is creating a pipeline builder deliberately so as to try and aggregate projects which can then be taken to private investors. Ghana is a case in point, and we've been working with Ghana and along with the DAC and the World Economic Forum on the country financing roadmap.
Great. I'll stop you there, and then we'll continue a bit later.
Surely.
Wonderful. I think I get a feeling you're encouraging the use of ETFs in PPP projects and getting people to invest $1,000 at a time. And this is great. There's a lot of financial structuring that I find as an ex-investment banker working in emerging markets, I find lacking these days. We used to structure projects in Mexico and other places that would get investment grade rating by tranching the different tranches of the debt financing and applying different risks to each one of them. And nowadays, I see that there's maybe not enough creativity. Mahmoud, you're looking at this from a global perspective. Financing the sustainable development. I mean, this is huge. From your position in the UN and interacting with governments around the world on this topic, what are you seeing now? Are you getting, I don't know whether to say frustrated? Are you getting feeling that there's no hope? Are you feeling that there is hope? Tell us, what does the financing of sustainable development look from where you sit?
I think the COVID-19 shock has been transformational in a positive way. So whether people talking about building back better, this is where you have a good benchmark to go to, or building forward better, as Kristalina, the managing director of the IMF, likes always to say, because you need really to do much better than what you were doing before. So I think there was some sort of a major wake-up call to a system that was not really doing well. Even when we were growing in the past, it was not inclusive, it was not that green, and it was not that smart. So and the issue of available funding, each time we check, when I was with colleagues working on the Finance for Development agenda back in 2015, assets under management were around 60 to 70 trillion, with many of such are basically with very low yield. Now the figure is exceeding $110 trillion. And then you are talking about a widening gap, even after it's widening, is around 4.2 trillion. So I think here is the big role for the NDBs, the investment banks, for many things, not just for de-risking and getting involved, but basically to solve this issue of the pipeline and having adequate information about what could really be an opportunity for investment. The other thing that we have been seeing, that there had been major crowding out, and this could be partially responsible for what Imad just mentioned about, despite the talk about PPP and investments in infrastructure, is still that smaller portion. It's basically the kind of crowding out through debt-based instruments to the equity-based instruments. Many countries have been finding it easier to go and borrow for basic infrastructure projects, while the PPP could be a better solution with better risk management and better maintenance. The other thing I like to emphasize here, that perhaps based on what just Piers mentioned, that people are excited, they want to do well, they want to do good, and there are many good opportunities for higher return and being good to society at the same time, but they don't know really what to do, because there is an issue of big concern about a great deal of ESG washing, greenwashing, as our good friend, the former IFC chairman, was saying in the past about this issue. So the only way to do it is to perhaps follow Christine Lagarde's approach to French persons, providing one is raising the question, Mr. Leroux in the past in the IFC, and Christine Lagarde is saying, well, do three things. Include, this means factoring in all of the benefits and negative and positive externalities in the assets that you are talking about. The second part is inform. This means that we need really to have a good benchmark and criteria for reference. And it's good that Piers as well mentioned the GISD, because there are lots of ideas about definition and transparency and included. And then based on all of that, do adequate investment where it really matters. And I see the SDGs as good framework that could include ESG with good alignment, climate. At the end of the day, climate is SDG 13, and the rest of the SDGs could really solve many of the problems that Imad just mentioned, including not just poverty, which is SDG 1, but the problem of unemployment that has been rising by more than 250 million because of COVID last year.
Wonderful. Thank you very much. Imad, I'm interested in knowing whether the World Bank is actively promoting ESG, People First, PPP. What is the World Bank doing with governments in terms of promoting these concepts? And if you're making funds available for project preparation, because preparing a project to be ESG rated requires doing a lot of work on environmental studies and social studies ahead of time. It requires money, which governments many times don't have. So please, you can comment on this and also follow on what you were mentioning earlier, the 5 elements that you think are important.
Thank you, Ziad. So listen, I want to just emphasize back, I think, a critical point, which is there isn't, an easy solution. Really expanding the financing for development potential for, all the countries in the emerging economies and developing economies that we're trying to help is going to require a lot of hard work. It's going to require a programmatic approach from upstream to downstream. And we know very clearly it's not the availability of funding and financing is the binding constraint. And we now hear of close to 120, 140 trillion of assets under management, actually, that's been growing, just to build on what Mahmoud had said. The key constraints remain, that either countries are lacking a conducive environment and they don't have the necessary pipeline of bankable, well-structured projects actually in place. So poor governance and institutional capacity, macroeconomic volatility, the political instability, inadequate sector structure regulation that I've mentioned, a limited off-taker credit worthiness, and overall lack of trust towards the private sector, challenges in the overall business environment, investment climate, etc. And this is where the bank works very hard holistically across all these areas to create the necessary enabling environment, the ecosystem that I've mentioned, and helping governments develop the pipelines. Now, we've seen green finance increase in the past 5 years. We've seen about 1.2 trillion, but the majority had been, of course, if you look at the non-China component, for example, it's about 5%. So we still have to do even much more in that regard. So what are we, recommending? The 5 to 6 critical aspects we all need to focus on is expand the pipeline development through high quality project preparation, promote standardization as part of infrastructure as an asset class, scale up the use of credit enhancements as needed, promote a development of aggregation platforms, enhance the alignment and disclosure around ESG, which is going to be critical, and work to integrate climate considerations, obviously both mitigation and resilience in PPP project and the overall infrastructure project cycle, and in addition to infratech requirements. I think these are very critical. We have actually worked through our global platform, the Global Infrastructure Facility and Swiss Re. I'll share a link of a critical work piece that has been done in that regard that sheds the light. I'll put that in the chat for people to look at. I'm cautiously optimistic in some ways. I see the private sector and I see a lot of convergence taking place. So if one looks at, we're seeing the fruits of the seeds of many of us, whether it's MDBs, whether it's civil society, whether it's the hard and social scientists, the development partners have moved, to converge, and the private sector, to move into sustainable finance and sustainable infrastructure quite effectively. Last week, we've seen more than 450 major investors sign a letter that's urging governments to set more ambitious emission reduction targets and detail clear roadmaps to decarbonize industries and implement mandatory climate risk disclosure requirements. That's kind of very unprecedented. I see through our global infrastructure facility, for example, an industry-led initiative, Fast Infra, which has been really looking at establishing a consistent, globally applicable labeling system. I see this year and next year are going to be very transformative in this convergence of all of these initiatives launched by different critical partners in that regard, which I think is going to be very helpful. And I'll share also a link on Fast Infra with that. But for us, from the World Bank perspective, we're going to help address the constraints to prioritize projects within the limited resources, build the sound institutions and regulations, develop, the right projects that are well structured, that are viable, that are sustainable, affordable, and offer value for money, and help governments execute transactions and manage risks. And we're going to do that with our tools, with our guidance. I think most of you know our websites, which encompasses a huge amount of efforts on standardization, on disclosure requirements, on the reference guide for PPPs, on PPP certification, on the QII operationalization approach in the work that we do. So we're going to continue to work holistically in that regard. going forward in full partnership, taking advantage, of the post-COVID momentum for recovery and COP26 and the convergence we're seeing in that regard.
Thank you very much. Thank you very much, Imad. This is very comprehensive. A lot of things to think about. We're talking a little bit more because we don't have many questions in the Q&A, and maybe the audience is still not used to using on the left-hand side of your screen. You'll see there's a button that says Q&A if you like to ask a question. We have one question there, but before we do that, let me go to you, Piers. And we've heard from Imad convergence, aggregation, the UNECE People First PPP standards talk about replicability. We talk about standardization in order to make it all of these PPP efforts more accessible to investors. Your thoughts, and maybe we want to continue the thought that you had started and I interrupted you.
Okay. Surely. Well, firstly, I mean, it's hugely impressive to hear this recital of tools and mechanisms and structures that are put in place by the multilateral development banks, all of which are designed to make it much easier, but also designed, I think, as safeguards as well to ensure that what is done in the name of PPP is actually done very much in the public good and with the public purpose. I think, though, if I can sort of continue to build a little bit on it, the agility of the investor is not necessarily aligned with the strength and robustness and solidity of the structures that we're talking about. And investors tend to be slightly fickle, slightly quick. They come in and out. They have very different time horizons, and that is one challenge we need to think in terms of, because the 30 years of an infrastructure project, that's perhaps more aligned with someone's pension plan than with someone's immediate schooling plan or whatever it may be. So there are challenges of alignment of horizon to deal with, but those can be overcome by structuring, as Ziad was indeed talking about, whether it's an ETF or which is an open-ended vehicles, but structuring vehicles that allow people to bring capital, to flow capital in. The challenge, I think, though, still remains selling the message of the opportunity and of the need to the everyday investor. The institutional investor, the pension fund, understands it. They get it. They know how to analyze the risk. They know where the benchmarks are that they can apply. They know how to speak to the World Bank. They know how to speak to the IFC or to the UN. The ordinary investor doesn't. And so I think there's still a question of how do you get the message out? How do you get the message of that opportunity? People are beginning to understand the SDGs. They're beginning to recognize this badge, but only beginning. And so there's still a lot more selling to be done, a lot more marketing rather than selling, let's say, a lot more marketing of the opportunities. But at the same time, there's got to be a response, and this is what we're trying to do with our pipeline builder, with the impact and family office ecosystem in Switzerland and more broadly in continental Europe, is trying to say to them, you've got this investment theme, we can show you a pipeline of X number of projects that match that investment theme from ABC different countries. And this is for the SDG Lab. This is for a public good, not for a private benefit. And the challenge is, how do you do that for big projects as well, big infrastructure projects? How do you get that message out? Let me leave it there. I think I hear such powerful messages from Imad and Mahmoud, but I still think those are messages which I understand, but perhaps aren't more broadly understood.
Wonderful. Thank you very much, Piers. There are questions about the MDBs working to work on what Mahmoud was talking about, in a way, unifying or standardizing ESG and other forms of standards for achieving sustainability Maybe I'll let Mahmoud comment quickly on this first, and then Imad.
Right. I think there is a transformational movement there. When I say the following, there are four actors normally dominating our economies: governments, private sector and markets, and then you have the regulators and the people. And I see, and based on what Piers and Imad just mentioned, I think there are some important movements here that we need really to recognize, because through that we can really see the transformation of SDGs from being a concept and a target into kind that you can see in everyday life. And with the growing role of the state, with the regulators now putting the new standards, including the one of the outcomes of the G7 ministerial meeting that was endorsed a couple of days ago about the TCFD, which is about the disclosure and climate-related risks. And that should be extended, and this is the area of tension I'm saying. We shouldn't be narrowing sustainability to be only climate change. We need to do other things to include the rest of the SDGs with us. So I see governments investing with their procurement power. I see regulators are trying to find the standards. And then the issue of information disclosure. And then the markets, we see every day a big entity, investment bank or a company claiming that they are doing this, that, and the other in this sphere as part of non-price competition. And then I see what's more important than that all, which is basically the people themselves, understanding what is needed. And because of that, I see the dynamics, like what happened and what some people call Black Wednesday, and I'm calling it White Wednesday, and what happened in the oil companies of the transformation. These are the people, small shareholders making the change, supported by the big players of the market. So these are basically very important changes. But the big thing that is really missing, despite our talk about MDGs before 2015 and then the SDGs and all what we talk about ESG, including the opportunities of investment in PPP, there is no one single country that has a budget based on SDGs. And this could be an excellent work for you, Piers, and your colleagues in the Geneva lab. Why don't you pick some countries? I know that Spain started that. I know that few African countries started to design their budgets based on this, because this will be the biggest thing. Government is spending hugely and it's going to be doing even bigger role in the future. And then you have the opportunities. Governments can crowd you in or crowd you out. They define the rules of engagement, including PPP. And then when you have that at the central level, and this could cascade at the local level, here really we can start talking about what SDG means, if governments are serious about what they're talking about in greening the economy or not. If it is not in the budget, it doesn't exist. As simple as that.
Thank you very much, Mahmoud. I understand, I may be wrong, but I understand that the nation of Wales also has adopted the SDGs, which is great for them. Imad, please go ahead.
So, Ziad, just very briefly to build on what Piers had been saying, and also on the MDBs side, the MDBs, obviously, each MDB has its own ESG safeguards and requirements, performance standards. For example, when we work on PPPs as a World Bank, we look at assessment criteria, our teams in terms of the strategic suitability of the project. There has to be preliminary studies that are technical, environmental, social, economic, financial, and legal on the specific project. We do the risk assessments, the PPP suitability, the fiscal affordability, as well as we even look at the institutional capabilities. That's in terms of when we're actually supporting directly PPP projects, and we look at some qualitative checklists and questions on equity of access, on sustainability, on affordability, on efficiency and effectiveness. So that's the approach we take. In parallel, we help build capacity of governments so that they can actually develop and have this built into their procurements, into their project cycles at the same time. And that's going to take a huge amount, obviously, of effort and support to get this done. The MDBs also on the infrastructure cooperation platform, which brings in all the MDBs, we worked together on issuing guidances, actually. So we looked at most of the ESG standards that the different EMDBs have, and we have something that will be coming out, that shows the common set that could be of guidance that could be beneficial. I don't think necessarily the point is that everybody has to adopt the same thing, but I think that everybody should have, their own safeguard systems and performance standards that actually cover the basics that are needed, that are above a certain threshold to do that. But I think with time, we will see some sort of gradual convergence that will take place in terms of the standards. And interesting enough, as I mentioned, if you look at the Fast Infra initiative, where the private sector there is leading on their own, of trying to come up with their own labeling systems and requirements, including with credit agencies, with the financiers, etc. And I shared also some links on that with the participants. So I think this is the direction we're going to be heading into, Ziad, going forward.
Thank you very much, Imad. Yeah, I think the private sector in many ways will lead on setting standards, especially with rating agencies, etc., and money talks. I would normally have given fellow panelists an opportunity to say a few closing words, but I'm very conscious that we're running 7 minutes behind our global conference time, and I don't want to take away from other sessions. So I will leave it here. I thank you very, very much. You have been great, and we have been honored to have you as panelists today. Thank you, and thank you for the audience. And
thank
you can
all the best.
To the next
Thank you, everyone. Good luck in the
Congress.
Thanks.
Thank you.
You take care.